How strong hands analyze the market. How strong hands take money from weak hands. Let's analyze your entry strategy, create your own personal system. Let's learn how to make money. Let's go. Every day, millions of dollars change their owners in the crypto market. Trading on the exchange is considered to be the biggest business on earth. Most people have no idea what drives this market. Sudden fluctuations always remain a mystery, occurring at the most unexpected moment. The market often moves to the exact opposite conclusions among traders. According to statistics, more than 95% of traders end up on the losing side of the market. Nevertheless, this video will help you take logical actions when making a trading decision. Weak and strong hands. Financial markets function on the principle of redistribution of capital from less experienced, weak hands to more experienced and successful traders, strong hands. Let's start by discussing strong hands, who have a lot of capital and the ability to professionally analyze the market. Their strength lies in the fact that they are always on the right side of the market. Avoid getting into difficult trading situations. Do not panic at sudden price fluctuations, and do not enter the market at its peak. Weak hands. Most traders in the market are beginners who, while in the process of learning, often make instinctive decisions when making trades. Weak hands tend to have a strong emotional attachment to their capital and have difficulty accepting losses, especially when their funds are rapidly dwindling. Novice traders often get stuck in the market, hoping prices will return to the level of their trades, and also tend to exit the market at any unexpected moves or bad news. Have you experienced this? Hopefully, it's behind you by now. We have already discussed that the market is a process of capital reallocation. Next, we'll look at how to identify the underlying trend, but we'll talk about that later. Right now, I want to tell you about an equally important topic: the beginning of a new bull run. To start a bull market, an asset begins to gradually decline day after day, week after week, showing minor upward spikes with decreasing highs, which is typical of a bear market. At the final stage, when weak hands become unbearable and start selling assets en masse due to fear of losses and potential losses, professionals start actively buying these assets. This process happens in all markets. An extreme manifestation of this process, called a selling climax, is necessary to start a big bullish movement when assets go from weak hands to strong hands. During this period, news becomes negative, triggering fear of the possible demise of the asset. The mood in the chat rooms becomes tense, and searches for the asset are at their lowest. Some traders leave the market and go to work at McDonald's. It is during this period that the real bull market begins. Unfortunately, many traders do not realize that the bull market has already arrived, even when asset prices have quadrupled in 6 months. They continue to be influenced by the fear that the previous bear market instilled in them. This prevents them from quickly adapting to the new conditions. Therefore, it is important to be able to promptly change the trading strategy when the market situation changes. Trading like a professional. To succeed in the financial market and become a good trader, you should trade according to the opinion of professionals, not against it. This means that you should be able to identify the main trend and join it when the movement starts to develop. However, this does not mean that you should not try to catch the moment of market reversal, but it is important to understand what you are doing. When analyzing trends, they are usually divided into the following categories: long-term, medium-term, and short-term. We can categorize a trend based on the time frame in which it is most useful to us. For example, if a trend is formed on a medium time frame, it will be a medium-term trend, and so on. I am sure you are clear with this. How to draw trend lines on a chart. In an uptrend, the trend line is drawn by connecting two minima. In a downtrend, the trend line is drawn by connecting two highs. Once the trend line is drawn and the price bounces off it for the third time, it is considered active. The price must now meet support or resistance at this trend line. A break of the trend line means the trend is over. Trend lines have various uses, but the main ones are in bounce or breakout strategy trading. To use trend lines in trading, you should look for entry points near these lines. This allows you to set a closer stop loss, which improves your risk-to-reward ratio. When the price bounces off the trend line 3 times, it is worth paying attention to it. There are 2 possible outcomes. The price will either continue bouncing off the trend line, or it will break the trend line. If the price continues to bounce, it indicates that the current trend is still in place. If there is a breakdown, it may indicate the end of the trend. For a better understanding of how trend lines work, I recommend doing some research by looking at past periods of time to realize that the market always moves in a certain direction. It is important to pay attention to the current state of the market you are working in to make sure you are trading in the right direction. Investor or trader? Many people face the problem of misunderstanding their activity in the market. They think that they just want to invest their money, but sometimes there is a desire to engage in trading. However, in the process of learning, they lose focus and start gambling in the market, turning the process into gambling. People who are successful in the market have a good understanding of money management, control risks, and know how to deal with stress. To overcome all the difficulties, you need to create a strict trading system for yourself. Precise adherence to the system allows you to avoid emotional outbursts and helps you to make the right decisions. Please remember that the perfect trading system does not exist. If such a system existed, more people would make money on the market. Be the master of your money. Do not rely on other people. System. The system should be based on a rational approach and logic, helping you to quickly correct erroneous decisions and increase your capital when you are in a profitable position. When using a system, you must be able to accept losses and be prepared for them, so the system must control losses. Deviation from the system can lead to negative emotional and financial consequences. Develop your own system customized specifically for you. I am ready to share my system with you. The video is already available on the channel, as well as cheat sheets in my Telegram channel. You are your own boss. Learn to read the market. It is your mind and analytical skills that will help you achieve success in trading. Remember that it is important to control your instincts and do not make trades without prior analysis. Strictly follow your system and control your risks. This is the key to success. I advise you to analyze this video and watch it again in 3 days to consolidate the information given to you. See you soon, my friend.